Hello guys, and glad to have you on board again. Today I'm going to record a very unpleasant video, but I think like I really have to do it anyway, because I've been answering like a lot of private messages about the same old things during the latest few days, and that has led me to believe that some of you guys are into such a desperate level of psychological management that I think I would be ashamed not trying to help you. Even though I'm going to try doing it the best possible way, you have to understand that if you are in deep shit, it means you probably have piled up so many mistakes so far. Hopefully you're going to survive once again these heavily volatile and stupid shit we're experiencing right now. Though I'm going to try giving you the real rational technical stuff and what really is at play, even though that also means I cannot and never will be able to forecast the future. So you need to understand that whether I'm going to, whatever I'm going to say today might be pleasant to hear or eventually not. But anyhow and anyway, I don't know anything about the future. The only thing I know for sure today is that the only crash I've seen is not on the markets. It's on the people's psychology. So that is the title for this video, and I'm going to explain everything about it because of course that was part of the plan. To see that kind of irrational behaviors, I just never thought it would go down that deep, to a point that even I have been influenced in my personal decisions by yours. And the fact that you have been seriously impacting my personal management into these current markets, to the point that I had to take a bit of a distance with the Discord because you guys were just so bearish and irrationally bearish that even I had some biases when I had to read my personal indicators and so on, which actually just taking a bit of a distance just took me like a half an hour to just settle, stop in with the Discord, the social networks, and all of the bullshit stuff that is going on right now, to just look at pure raw technicals. Okay? So I'm gonna do it straightforward, right in front of you guys, so you get the same information as I did. Okay? And then we'll explain why your readings and your psychology is probably not going the same way. That doesn't mean I'm perfect and you're the dumbest ones out there. It just means that you're less experienced than I am, probably. And I hope that someday you'll be able to do the same thing as I do, taking a bit of distance and having cold-blooded analysis. Okay? But like I said as an introduction, that doesn't mean I know the future more than you do. Okay? That just means anyhow and anyway my decisions will be smarter than yours. Just because yours are influenced. Okay? So I'll give you a few tips, of course, later on, but let's start with the technicals first, okay? Stop looking at single assets. Start looking at the broad market to get a vision of what truly is at play. Look at the damn crypto total. Is this a bear market? God fucking damn it. I can't be even more explanatory than that. It's just not possible. It's just not the case and never will be. I've seen multiple markets in my entire career, not to say thousands or even more than that. I've traded these and I know how they react. That doesn't mean I know how every asset reacts. Everything can remain and forever will be chaotic, and anything will forever be possible. So can these things go down to zero in a straight line? Technically speaking, they can. Probabilistically instead, very less likely going to, because I've never seen such a thing occurring in the market. Sure thing could be a first for everything, but I sincerely doubt it. My entire career is based on this, the fact that we don't know anything about the future, we certainly can't forecast it, but if you use a recurring strategy, well, somehow you hack the code, and you figure out that you don't know anything about one asset, but out of 100 or 1,000 assets, you somehow think it's working, and you see it working. So that's the thing, okay? It only works out if you take a bit of a distance with what you trade. Though I don't know anything about where cryptocurrencies are going in a single point of view, but in a broad vision of the global crypto market, I can tell you for sure, this thing is not going to crash. And I'm not even doubting a bit about it. It's not going to crash. It's not possible. Because these markets have a structure. That's what I study contextualization before trying to give a fuck about prices. You guys are just looking at raw prices like that. I mean, you basically delete and hide every indicators, okay? And just look at that and you say, oh man, prices are going down, it's not good, we're breaking some supports, oh, piece of crap, prices are going down and they will probably go even more. Yeah, could you even think about value for a second and the context? In which context is this downside move putting itself? Though how probable is this price to mean something? Because prices most of the time mean nothing at all, unless you contextualize them. So let's start doing this, okay? What matters to me is to know what type of market I'm dealing with, though I'm looking at the context structure. The context in here is definitely a trend. The moving average is far below the rising context, but the thing is that the context boxes are unfolded, which means this trend is either an excessive market, possibly a bubble, that's the argument of some people out there, or, and that's where we are, that is not a bubble, that's just a sign of a multi-time frame trend, which means we might be willing to see multiple breakouts on multiple time frames, but these require the market to have accumulated first and prepared for these trends. So the daily trend is excessive. Yes, it is. So let's check the weekly chart, for example. Is this one excessive as well? No, this one is just breaking. That's the typical breakout stuff. So we do have an overexcited trend on the daily chart just because we have broken multi-time frames in a single straight line. We've broken daily, 4-hour and weekly charts in the same time, and very luckily eventually the monthly one, which means the trend we're into will last much longer than the very short period we've experienced so far, because I've never seen such a shorter time frame trend. And this is a trend. We've fucked up the resistance level, and there's not even a chance we can pull back out there. Though everyone who's forecasting these types of things is just statistically betting against probabilities. And you can do such a thing, but it's just like, I'm going to take a real world example for some of the gamblers out there who will understand what that means. We're pretty much like differentiating someone playing with the lottery, in which you have just fairly significant low probabilities of getting to gain some money, okay? Against probably roulette, which is just a 50-50 game, okay? Of course, taking out the zero in the process. But basically, would you like to play lottery or roulette? Well, to me, the answer is pretty simple. Whoever answers lottery is an asshole. It's just gambling against statistics. Statistically speaking, you've got better chances to make money at roulette than you will at lottery. So that's pure and simple. Still, does that mean you're going to make money with the roulette? Nope, because it's slightly below 50% because of the zero. But still, now let's dive a bit deeper into the roulette stuff. Now it looks to me like what we're experiencing now is just an excessively stupid series of numbers that ended up at some point giving us like 20 red numbers in a row. Okay, let's put it plain simple. So you're going to see lots of public excitement over this roulette table. Basically, everyone will be standing aside and just looking at this thing. Man, it's statistically so rare, so that's great. That means something's happening out there. So it's attracting a shitload of information and a shitload of attention, okay? Let's assume that now we've got all of the medias and so on just sitting at that table, looking at that table because, oh man, we've got hell of a series out there, okay? Let's put it into 30, okay? 30 numbers in the same colors in a row. Everyone will be, oh man, what the hell is going on? Statistically defying stuff, whatever. Okay, great. It attracts a shitload of attention, emotions. Well, statistically speaking, that's just silly as possible, okay? And what do we have next to this table? All of these people are gambling, and as emotion is so intense, they tend to do stupid gambling stuff. Martingales and whatever. So you're going to see 50-50 of the people just splitting across the table onto some stupidly, absolutely unreliable trading strategies or gambling strategies. So you've got the black side who's going to say, man, 30 fucking red. The next one's definitely going to be black, and I'm going to go martingale and doubling down on each and every next red, and I'm going to bet on the black each and every time. And I'm going to be right sooner or later because anyhow and anyway, it will always go back to black. Sure thing, that's a reality. It will. The thing is that there's a limit you can bet on a roulette, which means you actually ended up knowing how much you can lose, never knowing how much you can gain, which is definitely the stupidest thing to do out there. Then you get the opposite guys, the red betting stupid guys, which is basically, man, we've managed to make 30 in a fucking row. Let's bet on making the 31st. Oh, fucking hell. That's just as silly, stupidly anti-statistic as ever, of course, as well. So both parties are actually totally wrong, and that's exactly what we see right now. I see people calling for the crash. Well, probability of a crash in here is just like gambling on lottery. It's just as stupidly, irrationally, statistically probable rather than the opposite way. And despite that, everyone else is going for roulette. Like, man, we've got into such a downside move. Maybe we're going to go one step further. Oh, god fucking damn it. And you've got the opposite guys who are gambling on martingales, which are doubling down on leveraged positions, thinking that anyhow and anyway, it will go back to the mean. Yes, it will, but you're probably going to end up broken in between. So just think of it that way. Both sides are just gambling. If you want to make money in the market, you might want to do something different. And that's what I do. I don't go emotionally intense because of anti-statistical behaviors of price. I just know people are getting absolutely staggeringly, stupidly emotive right now, which means I know volatility can show out of there. I also know that anyhow and anyway, market will return to the mean. And they will, because this simply can't go bullish to bearish. There's not even a chance it can. It can, of course, but the probabilities of it to happen are so low that you would better win the lottery. Okay, so of course some people win the lottery a little once in a while. Clap, clap, congratulations to these. That's not my job. My job is to try making money on a day-to-day basis, not trying to win the lottery on a single day. So betting against statistics is just it's just the opposite of what you should think of right now. So probabilities for a crash, definitely not relevant to consider. Probabilities of a market to surge to the upside, well, I would say fairly limited as well. Probability to first return to the mean and then assess is what definitely feels a lot more probable. The only thing you must not do in between is to say, okay, I'm buying in here because the market will not go there. Well, sure shit, there is a lot of emotions right now and we can go any fucking where we want. Still, there will be a limit to this. So, whoever is trying to keep on gambling to the downside, or whoever is waiting for lower prices to show up in order to get into this market, are making staggeringly stupid decisions. Okay? So, if you're in, and if you're using leverage, well, you should have thought about it because, damn it, I told you so many times recently. I told you this would go down to some stupid stuff and that this could mean unreliably stupid volatility. But still, I also warned you that you must just take it as it is. There's nothing you can do about it, and there's no way to measure how stupid human beings can turn out to be. So, there is a limited level of stupidity, but still, the reality means price can't go anywhere they want. There will be a limit to this. It's just when stupidity will overtake statistical bets. At some point, some smart guys will just bet against those who are willing to sell at stupid prices, and that is the reality I've lived in for 10 years. Anyhow and anyway, at some point, it will not be statistically worth it to keep playing the same trend. We'll go on the opposite direction and neutralize. Okay? Does that mean everyone will surge to the upside? Well, let me be real clear. In a crypto total way, I definitely think we're going to go new all-time highs. That doesn't mean every one of these guys will surge back to all-time highs. Some will probably die in between. Which ones? Let me be real clear. I goddamn don't know. I don't know, and I won't know until we get to the third range boundaries, because that is, once again, something I told you so far. To don't give a fuck about prices when we're looking at the bottom of a range, mostly when there is so much psychological breakdown in here that prices can do some stupid stuff. I told you we'll be able to figure out who are the ones and that worth it, and who are the ones we'll have to leave behind when this guy will get to the third range boundary. When in that perspective, we'll be able to study how how bearish some assets have been and how bullish they've been in a counter trend. Not in a counter trend, how bullish they've been retracing this down movement. We're going to study relative strength of both the bearish wave and the bullish wave, and that will tell me with a reasonable confidence statistics which ones are the ones I want to keep or reinforce and which ones are the ones I'm going to leave behind. And that doesn't mean I'm going to pick the right ones and leave the wrong ones. That means, statistically speaking, I've done what I always do and always the same way, and that is where the magic happens. Consistency. I've always been clear with that. If you lack of consistency, you're never going to make it in trading. Learning consistency is your top priority. That means you need to learn a fucking strategy, and you need to learn how not to tweak it, how to change it, and how not to change it because of your psychological pressure. I know right now lots of you guys just can't control it. So big, so high levels of cortisol. You've got amygdala response. Everything just forces you to act like you're going to die if you don't. Just don't. Just listen. It's not rational, and you know it. I've shared out there all of the technical knowledge you know to have a reasonably good use of a strategy. And you can customize mine, of course. It's just a starting point. You just don't have to copy me. But more importantly, there's a psychological process to get into a profitable trading. And of course, you're not yet there. But I've warned you. I knew you would fall down for this. I just try to warn you the best possible way, tell you what you would go fall for. And you just did. It's incredible. So I hope that some of you guys have listened to just the 10% of all the lessons shared out there and put it into an apply state. Those who fell for it, well, I hope you haven't lost so much money, and hope you will be better the next time, okay? Don't blame yourself, just move on. What matters is how you progress, not necessarily how you trade immediately today, okay? So, now what to do next? We need to focus on a time frame, okay? That's what every professionals do. We know what time frame we need to trade on. Experts traders are trading 4-hour and daily charts. Trend followers are trading weekly, which means, do we give a fuck about real-time candles? Most importantly, when they can do some lower shadow crazy stuff. Okay? We don't give a fuck about the candles until they close. Which means you shouldn't be looking at this market more than once a day and once a week. And that is for experienced traders still. So whoever is looking at real-time charts now or short-term time frame is either massively experienced or just putting yourself at risk of eventually making a decision that you definitely are not able to go for. And let me be real honest. I know most of you guys just do this. You fall for it. You look at short-term charts and you try to figure out that eventually you should buy this and this because prices are so attractive and so on and whatever. This makes absolutely no rational sense, but still you do it because you feel like you have to. That is just the core basics of an amygdala response. So don't ever do this, ever. Just put yourself at rest for a while and understand that looking at charts once a day is more than enough. Anything else is bullshit. There's another thing you need to do in every range, and I've always made it clear. Never look at informations. Never look at social networks. Never look at bullshit guys in YouTube who try to fill you with a shitload of information. You want that information because you feel so much uncertainty that you want to fill the gaps with anything available out there. So you're going to look a staggering amount of YouTubers that's going to say one thing and the other is going to say the opposite and whatever. It's just leading you to confusion. Don't ever do it. Maybe you're wrong. Eventually you'll be right, but who gives a fuck? It's no more than a gamble if you do this. You're gambling your future on a white or red solution. That's not what this is all about. Manage your leverage, be smarter than that, and let the volatility do the fucking job. When it will be over, we'll eventually return to the mean, and if you died in between, that means you've made a mistake. So don't do it, okay? And the more you look at charts, the more you'll be willing to make these mistakes. So please don't. Bye, guys.